Well, let me just sort of step back for a second and just sort of say that as long-term investors, it's important to look over the long term. So this is one of the reasons that I do charts like this that we're about to see, is looking at long time periods.
I get it.
For Tesla, for me, it's very clear that this company is building for something that's a much bigger future than what these charts currently show. And as we as we go through the charts, we'll see how impressive it is already. But like they say, you ain't seen nothing yet.
I mean, I have seen them because you've done forecasts. Other shows we've done, we did forecasts. But yeah, right. They're going to prove the proof is in the pudding, right?
Yep.
Yeah. All right, let's go.
So this is kind of a neat chart, and it's in some ways kind of a weird one. And it's a milestone. The company has crossed $500 billion in revenue. Now, any company that you graph the revenues like this, you're going to have a chart like this if the revenue is growing over time. So it's kind of strange in that regard, but still, $500 billion in revenue for Tesla. Cumulative revenue. This is impressive, and they're just getting started at this point. The next $500 billion will come much faster than the first $500 billion. And
Yeah.
we'll get to the point where we're probably doing $1 trillion in revenue a year and then more.
Yeah, pretty soon. With robotaxi and of course with the bots. Yeah, you've shown that.
Now, if you look at it over trailing 12 months, this is one way to look at trends. You can see that revenue's flatlined really for the last, call it 2.5 years. So it's easy to get despondent about the company. A lot of people that are negative about Tesla will point to a chart like this and say, well, look, the company's done nothing for 2.5 years. Why would you pay so much for this company? Well, that's all well and good, but the valuation of a company is always forward-looking, not backward-looking. Backward-looking, I think, gives you some perspective of where the companies come from, but it doesn't necessarily really tell you too much about where they're going unless you're looking at the right backward-looking information, which we'll cover today. So, obviously we would prefer that the chart continued to go up to the right, higher for the last couple of years, but that hasn't been the case.
Yeah. And this is revenue. So we're going to get to investments. We're going to get to the new businesses, but this is car business. Revenue's flat. We know what happened to the economy in the macro, but still, it was disappointing for many people who thought that there was going to be 50% growth forever on electric vehicles.
And yet electric vehicles are making progress in the world. They're becoming a larger share worldwide in all markets. That's been good, even though Tesla has had some challenges with respect to their total revenues.
But what's interesting, I think, and you'll show it to us, is that Tesla's still making money. So they have this philosophy, don't they? Right? And that's what the numbers show you, that even though revenue is flat, they're not trying to, they could if they wanted to boost it, but they're really more important about money. Cash is critical. Having a healthy business and preparing to invest that into the future is what they were really doing.
That's right. This is the same information, but looking at the rate of change in the trailing 12-month revenue. And you can see that this has fluctuated between 0 and 120% year-over-year growth. Future growth is coming. Okay, we've just gone through a period where essentially that we've had no growth since second quarter of 2024, right? But this won't always look like this. Things will improve. The company will start growing its revenues again.
Yeah, this is a good way to look at it. Okay.
And then the next slide is just the quarterly revenue. This was a record quarter. And as you pointed out, it's did you say it was 25% increase? I'm not sure it was quite that much, but it was a very strong quarter in terms of growth sequentially from the prior quarter, 28 billion or so in revenue.
Gotcha. And this is the pull forward too, of course. Yeah, just to be clear.
And then the year-over-year change in the trailing 12-month net income. So looking at bottom line profit now, we've gone from revenue all the way down through the income statement to the bottom line. And even though they had 0% year-over-year growth in revenue, they had high 30s growth in net income year-over-year. So they're doing something right. This goes to show that companies can grow their profitability sometimes without growing revenue.
There you go. That's it. And that's efficiency is improving, right? Their ability to
that's right.
Just lower their cost of goods, but maintain your revenue. Yeah.
Yeah. And then we've got a couple businesses in Tesla in the energy and the services and other business now that are contributing meaningfully to profits. This is the cumulative gross margin. This is kind of the first line of profitability for a company. It's taking revenue minus the cost to produce that revenue. It doesn't factor in all business expenses, but just the cost for those different products. And you can see over the lifetime now of Tesla, they've produced over $100 billion in cumulative gross profit, with $5 billion just this quarter. which
Cern,
is,
why do
I
you
think, the third highest quarterly gross profit of the company so far.
why do you do cumulative? Like some people think that cumulative is a useless number.
It just puts it in perspective in terms of, half a trillion in revenue and 100 billion, so 20% of that in gross profit. A lot of people, I think, suffer from misconceptions that Tesla isn't very profitable. They haven't, they wouldn't have made money if it wasn't for this, that, or the other thing. And it's just like, well, here's just some perspective for you. The company has been making consistent progress over time.
There you go. Okay, I got you now. That's the point.
This is a quarterly gross profit. You can see we've had quarters before where the company made more than 5 billion in gross profit, but this was, I think, the fourth largest one. So, a strong quarter. I think a lot of people sort of said, oh, the quarter was, it wasn't really much of anything. It's like, well, no, actually, this is a pretty strong quarter for Tesla. Top four.
And the gross profit wouldn't be, is that because of the pull forward also?
Yeah, I mean, certainly, right? If you sell more vehicles, if those sales are profitable, then the gross profit will be higher. I think it remains to be seen how much of a pull forward there actually is. I think Q4 actually could be surprising on the upside. This is gross profit margin, so the gross profits over the revenues, and 18%. It's been higher, it's been lower. Pretty good for mostly an auto company. And as we know, as we've discussed, 100 times before, this company is transitioning from an auto company to really an AI-powered company. Robotaxi and Optimus ultimately will drive this business. And you're going to see gross margins rise significantly over time as they ramp those businesses.
And I think that, even the auto business will turn into higher profit margin, depending on where you put in the FSD. But just in general, I think they're going to turn auto right into a subscription business and not just a one-time sale. They're going to bundle everything into it. You just have a low monthly fee and you got everything you want plus the car drives itself. And so the margins for that will just increasingly, right? You'll buy more premium connectivity, you'll have an entertainment package. All of that will add to 80% plus margins, not just the car sale, right?
Yes, at some point. And the beautiful thing now about as we head into that world of autonomy, Tesla becomes its own largest customer. Right.
So what happens to auto when that happens?
Well, it'd be interesting to see how they end up reporting that. And what do they sell their own vehicles to themselves at, right? Is they book a profit in autos and then show that as a cost on a different business unit somewhere else? Internally they should be doing that. So it'll be interesting to see how they end up handling it.
Wow. Okay. We're getting close. We're going to find out.
Yeah. SG&A expenses this quarter ticked up quite a bit. And we've learned subsequently that there was some higher legal costs, a higher compensation costs for sort of their AI employees, AI-focused employees, and a few other things. 25 million, I think, for higher cost. They said related to the annual meeting, and it's probably related more to the proxy and the special committee work. So it was the highest ever in terms of SG&A expenses. We should expect this to grow over time. Tesla's a growing company, and they're adding to their team. But there were definitely some sort of one-time items in this number. I marked in sort of a darker orange here. There was another quarter in the past in 2021 Q4 where SG&A went up a lot, and that was some costs associated with, I think, with Elon exercising some stock options, some taxes perhaps that may have impacted that the company had to pay. So I think that next quarter we'll probably see the SG&A number come back down a little bit again.
Yeah, and most of these one-offs. Yeah, that's what we're thinking.
Yeah, and here's the actual comment from the 10Q. They had a $168 million increase in operating expenses, including legal charges, $151 million higher increase in employee and labor costs, $38 million increase in stock-based compensation, and $25 million increase in marketing expenses, they said there. But on the call, they talked about the cost of, I think they said something about the annual meeting, which again is probably related to the special committee and the proxy efforts.
That makes more sense than the others who had other ideas of what that could mean. Yeah. Maybe more bots being shown, and doesn't make sense, doesn't.
Yeah. Now, this is an interesting chart, and this is going to be really fascinating to watch going forward, but this is operating expenses as a percent of revenue. So ideally, you want these as low as possible. And you can see from about 2016, where they peaked at about 40% of revenue, that they came way down and they got serious operating leverage, and those expenses went all the way down to below 10%. I think about 8%, maybe 7% at its lowest. And in the last couple of years, they've ticked back up again as the company has been making investments in their FSD and Optimus and so on. At some point, once those businesses start to ramp, this should start to turn down again. And you can see, actually, if you look at the quarterly numbers, which are the gray bars, whereas the red line is the last 12 months, it kind of smooths out the quarterly numbers. But if you look at the gray bars, you can see the last 2 quarters, it's ticked back down a little bit again. Partly this is related to sort of how much capacity is the company using? Are they operating efficiently? It's a nice measure of looking at that. So there's some encouragement here that things may start to turn down again. We'll have to see. But certainly as they ramp Robotaxi and eventually Optimus, these numbers should go much lower.
No, actually, that's what I'm going to say. It's like, actually, isn't it a good thing if you see it go up? Like, going up means that they're preparing for rollout of a brand new product. Let's say if you're going to roll out Robotaxi, you need more superchargers, you need more service centers, you need to convert those service centers to be able to handle 24/7 Robotaxi drop-offs, you need Robotaxi maintenance. Now, of course, they're slowly getting just Austin and others who may not show up now, but as they roll out to 10 metro areas in December, the cost of Robotaxi rollout is going to be high, right? The cost of the app. Is that where most of this shouldn't it show up? Like, so when you see a pop like this, that means, hey, the business is actually coming.
What shows up here really is R&D and the SG&A expenses. So some of that obviously is investing for the future, absolutely.
Yeah.
If this was going up and you didn't have the expectation that they're going to be starting a new business line, then you would start to ask some questions about why is the operating leverage decreasing.
I want it to go up. I don't want it to go down.
In the short term, it's fine. It's not indicative of any kind of problem. All right. Cumulative operating income since Q3 2012 is now approaching about 40 billion. And you can see that in the early days, the company lost money. And for a while, they lost an increasingly large amount of money, right? That the line started to dip down faster and faster and faster, right? And at one point, they lost about $5 billion in operating income. And they dug themselves out of that hole. It took a little while, about 3 years. And since then, it's been much more vertical in terms of profitability. And they're now up to almost 40 billion in cumulative operating income. So it just sort of shows when a company hits that sort of sweet spot, when they're operating at a point where they can make money, how quickly it can add up.
This is 2018. That's operating hell. This is when Elon was, he had that photo of himself going bankrupt.
Right.
He was sleeping in the factory, that photo of him, and he was in just the worst shape of his life, or the worst period of his life. He thought that Tesla might go bankrupt. Truly, it truly was. Like, this was the point. Remember how every time you have these Tesla Qs saying Tesla's going to go bankrupt? Well, this was actually kind of true. It could have, because Model 3 ramp up was just hell. He fixed it. And once you see this, his input, once he fixed it, boom, he solved the problem.
Some people consider this to be the valley of death, that you've got to walk through the valley of death and to get to the other side. And the faster you get through it, the better. And unfortunately, if you look at Ford's EV division results, this valley of death is getting deeper and deeper. It's becoming a canyon of death for them.